President Trump says that oil prices and overall inflation will go down very rapidly as soon as the war ends. Do you agree with that?
I don't have a forecast on that.
What you're watching here is a press briefing by Jerome Powell, the chair of the Federal Reserve, following a meeting of the Federal Open Market Committee, often called the FOMC. This is one of the most closely watched events in global finance because it gives insight into the direction of U.S. monetary policy. At a basic level, the Federal Reserve controls key tools, like interest rates and money supply, to manage inflation, employment, and overall economic stability. So when Powell speaks, markets, governments, and investors around the world pay very close attention. Watch till the end. Do you agree or disagree? And what do you think happens next?
When we're thinking about the impact on American households, as you know, they've been facing these higher prices for years. They've seen an almost $1 increase in gas. How worried are you about households, especially lower income families, being able to afford those price hikes? And should people be bracing for higher costs, including for food now?
We don't know how big these effects are going to be, and I don't want to characterize them in any way. Of course, people are already seeing gas prices. Gas prices are up almost $1 a gallon. We hope that isn't for a long period of time, and of course people will feel that, but I don't want to speculate about what that might mean, because honestly that would sound like I have some idea of what's actually going to happen, and I don't think anybody really does. We're going to see how this works out, and I just would leave it at that.
Victoria.
Hi, Victoria Guido with Politico. I just wanted to ask, for purposes of the next meeting, how the Middle East war develops between now and then, how are you thinking about what might guide action at your next meeting? I mean, if we have oil prices, above $100 a barrel the entire time until the next meeting, is that going to change your wait and see stance? Like, what would lead you all to move, or are you on hold pretty indefinitely?
We'll have to wait and see. I mean, we always say we're going to learn more by the next meeting, and usually we do, but in this case we're going to learn a lot, because we're going to learn 6 weeks to the day till the next meeting, and we're going to see whether what happens is it's going to be very important for the way the economy looks and the way the outlook evolves with what happens in the Middle East. That's going to be a big factor, and we'll know that then. I don't know how it's going to affect our thinking. I really don't. And we did talk about alternative scenarios a little bit, but it's just, I wouldn't bring that in here. It's very uncertain, and I just want to remember that we don't know, and we shouldn't assume it's going to be one thing or another. We're going to see.
So is it a matter of you don't know how the situation itself is going to evolve, or even if things remain as they are, the economy could still remain relatively durable in face of them?
Yeah, that's true too. No, I mean, the U.S. economy has just, made it's been strong through a whole bunch of challenges. I mean, if you go back to 2023, when we raised rates a lot in 22 and 23, and close to 100% of economists called for a recession, which didn't happen. In fact, 2023 was a really strong year. So the U.S. economy has really been just doing pretty well through a lot of significant challenges over the past few years. It's been amazing to see. And I don't know what's going to happen in the next intermeeting cycle, and I don't know what's going to happen in the Middle East. I wouldn't want to speculate.
In the video, you can see Powell standing in front of multiple U.S. flags, which reflects the formal and institutional nature of the announcement. The tone is measured and deliberate. This is typical. Every word is chosen carefully because even small changes in language can move financial markets. The headline on the screen mentions this briefing comes after an FOMC meeting. These meetings are where policymakers decide whether to raise, lower, or hold interest rates. If rates are raised, borrowing becomes more expensive, which tends to slow down spending and reduce inflation. If rates are lowered, borrowing is cheaper, encouraging businesses and consumers to spend more, which can stimulate economic growth. From Powell's expressions and gestures, calm, controlled, occasionally emphasizing points with his hands, you can tell he's balancing two key priorities: maintaining credibility and managing expectations. Central banks don't just act, they guide markets through communication. This is often called forward guidance. Another important layer here is timing. The date shown March 18, 2026 suggests this is part of an ongoing economic cycle. At any given time, the Fed might be dealing with inflation concerns, recession risks, or labor market shifts. Powell's job is to signal how the Fed is interpreting current economic data and what it might do next. Also notice the branding from Forbes in the corner, indicating this is being broadcast as breaking news. That reinforces how impactful these announcements are not just for economists, but for everyday people. Interest rate decisions affect mortgages, loans, credit cards, and even exchange rates, which can influence economies far beyond the US, including places like Nigeria. In summary, this video isn't just a speech, it's a key moment of economic communication. Powell is essentially translating complex financial conditions into signals for markets and the public. Understanding these briefings helps you see how global economic decisions are made and how they ripple across the world.